When you're new to financial markets, it's quite difficult to figure out where things are going. You might be looking at the VIX, you might be looking at yields, the DXY, gold, silver, bonds, major indices or components of those indices. It's really tough. It can be a very messy picture, but I'd like to clarify things for you in this video. I'm going to give you an insight which is literally a game changer. Let's run the numbers. Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. What I was saying before, it's really confusing if you're new inside financial markets to figure out what the heck is going on. What I want to show you here is the VIX. The VIX has been a really good predictor of where crypto prices could be going next. Now the key is that the prediction is not on the VIX, it's on the inverted VIX. You can see if I invert it like this, it gives you quite a good picture of where prices can be going. What about when we look at the DXY? If I invert the DXY, and this is something that we do a lot inside the Masterclass, you can see that the DXY, the inverted DXY, gives you a bit of a good understanding. Well, it gives you a good understanding of where crypto could be going. What about if we invert yields? That can also give you a really good concept. Now, what are these three inverted charts giving you an indication of? The first thing that you would be looking at is the 10-year yield. The inverted 10-year yield is showing that there's a potential weakness inside the crypto market. What about the DXY? That's showing that there could be a little bit of sustained weakness. And what about the VIX? A little bit weak. But these particular patterns are quite good. What it comes down to is understanding structure. Masterclass students, we discuss this particular chart in TM6. What I want to say here is something really important. In yesterday's video, we described this fair value gap and how you could actually detect it ahead of time. If you haven't seen that video, go back to yesterday's video and have a look. It's a really important video. Now we're seeing that the DXY just crashed through all of this and has gravitationally been pulled back. We'll zoom into the DXY just a little bit more. You can see that big gap down and this consolidation. But what was really happening? To understand that, we need to mark up structure. Or you can just use this indicator available from CTKSMethod.org. What we can see here is when the DXY tanked down because it couldn't overcome a level of structural resistance. It got caught by safety nets below, structural support. Even though we can overshoot, we generally get magnetized back to these particular levels. And I was talking in yesterday's video about fair value gaps, these imbalances between demand and supply, between buyers and sellers. And we can determine where the fair value gaps are. You get negative fair value gaps and positive fair value gaps. Now, I want to ask the question, and this is a good one to just test your knowledge. If this positive fair value gap occurs, what is going to happen to Bitcoin and also crypto? Please let me know your thoughts in the comments. It's a really good thing to just jot down what you think. The second thing I'd like to take you through is the VIX as opposed to Bitcoin. Bitcoin is always that blue line. What we can see here, as the VIX was going up, Bitcoin was coming down. But when the VIX started to drop, and it dropped precipitously, that created a rally inside the crypto space. Then what we saw is the VIX decaying and Bitcoin rallying. Often it's really hard for people to understand inverted relationships. So I'm just going to invert the scale and just make sure that they move together as one. Now you can see it much more clearly. This particular relationship is holding out across markets. And it's one that you need to be really, really aware of. Now, what does it mean? We can only really figure that out when we understand structure. So let's pop the structure on and just see what's happening. We had a negative fair value gap inside the VIX. We came up and tried to test getting across this structural resistance, but we couldn't do so. We had a precipitous drop between this structural resistance level and these lower structural support levels. You see, just like the DXY, the VIX obeys structure. And when it obeys structure, you need to pay attention because every chart obeys its own CTKS structure, and they're all different. Many people cheered on Bitcoin's victory and their own crypto's victory as the VIX and the DXY tanked down. They misread the signals and they misread the structure. This is why you must look at structure first and foremost, because the fate of your chart is determined by those things. Therefore, just like the DXY, we've got a positive fair value gap that's emerging inside the chart, and we know where these fair value gaps are before anybody else does. We've now looked below the structure of the VIX and also the structure of the DXY. It's incredibly powerful when you start to stack probabilities. When you stack probabilities and you understand that all charts are intercorrelated and interconnected, it is a literal game changer. When you're new, you do not stack probabilities, but when you've been in the markets for decades, you definitely do, and you have a lot of rules. Rule 282 is a particularly good one. We saw that the yields, inverted yields, can move with Bitcoin. Also, the DXY pairs, such as Forex, the indices, all impact Bitcoin and total CTKS structure. Now, what does this mean? The first thing that it means, you must be aware of the Tier 1, Tier 2, and Tier 3 charts in terms of their CTKS structural levels. CTKS structure is the most statistically significant structural support and resistance in existence. You just recently looked at the DXY's structural support and resistance and the VIX's structural support and resistance, and we knew ahead of time where the negative and positive fair value gaps were. It's when you can stack probabilities, when you can look across all of the Tier 1, Tier 2, and Tier 3 charts to gain the pulse of the market, that consistent profitability, you're literally on the doorstep of that. It will take some time to learn how to stack probabilities, but when we looked at the S&P 500 levels, the CTKS structure, we were about here. You can notice that we came up a little and then we've been degrading. And this has resulted in the DXY and the VIX going up at the same time. Stacking probabilities is just to the understanding that all charts are intercorrelated and interconnected. So what happened in yesterday's trading session? We had so much structural resistance that we needed to get through. We just couldn't get through it. And then a negative fair value gap between about the 56.31 and the 56.06 level. You can see that this was a quite good structural support level at 56.06, and that managed to reverse price. Now, what can we see now? We've got a low here, a low there, but this low is higher than that low. We're creating a higher low. What does that mean? It says that the S&P 500 is seeking to re-challenge this 56.31 level. Now, what does that mean? It means that the VIX is likely to keep on coming down. The DXY is likely to keep on coming down. But we must reflect this through the futures. This particular S&P chart just stops trading. It's the SPX. Therefore, we must look at the futures to determine if this momentum has continued or we're starting to break down below different levels. And this is the way that you want to look across the markets. We can see that the S&P 500 futures is weakening somewhat. So the just replaying, coming back to structural support is on the cards. Look at the NASDAQ futures. They're quite weak. What does this tell us? It tells us that the VIX and the DXY and the yields are all gathering strength. What does that tell us about Bitcoin? That there's more likely to be negative downside than positive upside. But does that mean it's an absolute certainty? No. We need to keep our eyes on what is actually occurring and how it relates to structure. Therefore, if we see the S&P 500 just trading below structural support levels, that opens up lower structural support. But if we see it trading above the 5640 mark, that opens higher structural resistance levels above that. A really good exercise to get you thinking in terms of structural support and structural resistance is to think in terms of A, B, and C. Do you expect, just let me know in the comments, do you think the S&P 500 is going to hang around that B level, which is where it pretty much closed out, 56.16? Or do you think we're going to come up to around the A level, 56.40, or down to the C level, around 55.90? And now an additional layer on top of this. If we were coming down to C, what would be happening to the VIX, the DXY, and the yields? And if we were coming up to A, what would be happening to the VIX, the DXY, and the yields? And what would be happening to Bitcoin's price? That's the key. If you do these thought exercises, you're actually going to train yourself really, really well. And thank you very much to John. The reason that we look at the stock market before we look at crypto and, of course, Bitcoin is because Bitcoin cannot escape the stock market's gravity. If the stock market is going up, hey, Bitcoin's going up. The stock market is going down, you got it. Same thing. Unfortunately, many people think that crypto is completely disassociated with the main stock market. This is not the case, and it never was. What you can see, this red line is the VIX, the inverted VIX. It is very explanatory of what's happening inside crypto. If you know and look at the VIX, you're already ahead of 95% of people. One thing that's really interesting to note, just be aware this blue line is Bitcoin. So as we see Bitcoin doing this from around the 24th, we can see what happened to Ethereum. Ethereum is weaker than Bitcoin at the current time. Solana is incredibly strong. And look at Binance Coin. Binance Coin is sinking. XRP sinking. DOGE sinking. Now, what do I mean by sinking? I mean the difference or variation between where the chart is here and where this chart is. And look at total crypto market cap. That is really quite close. That's all of the crypto market. But what we can see here is ADA is also sinking. That gap is getting big. Now, that actually means a couple of different things. We're getting pretty significant sell downs inside the crypto market, but some projects are holding up better than others. When you overlay like this, you can actually see what particular projects are strong and what are weak. And when looking across all of the crypto market, what we can see, this particular river, the middle of that river is Bitcoin. We've got an upper bank and a lower bank. And just recently, the developer and founder Pavel Durov of Telegram was arrested in France. And what happened to Ton and Not? They've both come down rather significantly, but we can see the entire crypto market has come down. At the moment, these are outliers. FET and Tron are currently doing the best. One thing that I would like you to see, when you look, for example, at the Ethereum ecosystem, just think, the VIX is going up, the yields are going up, the DXY is going up. What does that mean? It means the Ethereum ecosystem is coming down because Bitcoin is. The real world asset ecosystem is coming down. Gaming is coming down. Solana is coming down. But look at Helium. It's starting to divert from that. Keep your eye on Helium. Inside the service, we can see that Bitcoin Cash is performing the worst and Solana is performing the best. In terms of AI and big data, it's all coming down. Distributed computing and file storage, PHA and Flux, are starting to diverge. When you look at groups like this, you can actually find different winners. So it's a really good thing to do. When we look at the memes, we can see that Bitcoin going negative has pushed all the memes down. And unfortunately, Pepe, Whiff, Brett, and Bohm are getting whacked. Checking out the wallets, Safe is not doing too badly. SafePal, pretty good as well. And looking at DeFi, that's all coming down. Binance Labs coming down. DePIN coming down. Centralized exchanges and decentralized exchanges are coming down. But Quick is showing a bit of variation. Pretty cool. The Bitcoin ecosystem is coming down and Layer 2 coming down. But what if the VIX starts to decay? The yields start to decay, the DXY starts to decay. What do you think is going to happen to these ecosystems? Please let me know in the comments. It's really good for you to think like this. I call this active learning. Total crypto market cap can give us some really good insights into where the crypto market is going. What is this red line? That's the VIX. What do you notice about the VIX? This is the inverted VIX. And how total crypto market cap is moving. Well, they're following each other. In other words, the inversion of the VIX. Now, how do you tell if it's inverted? Typically, a price scale goes up like this. You see higher numbers up here. If the scale is inverted, you see the opposite occur. There's lower numbers up here and there's higher numbers down there. This is the inverted VIX. If you thought that looking at the VIX wasn't important, hopefully I've changed your mind. Inside the CTKS Global family, we're very, very different from other communities. We seek to find the news inside the chart. For example, this is the inverted VIX. We can see when it did that big spike up, it drove Bitcoin's price down. Remember, this is the inverted VIX. So when the inverted VIX is coming down, that means the real VIX is going in the opposite direction. It's going up. It can be a little bit tricky to interpret this at the start, but you'll get the hang of it. It's about continuously reliable signals. I make a big song and dance about continuously reliable signals inside the Masterclass. Many of the things that commentators talk about inside financial markets are not continuously reliable signals, and that means they're trash. Not the commentators, the indicators that they use. Also, this particular green line, this is from the service. This is US liquidity. Last time we had a big dump down in liquidity and we're seeing that now. We had negative price momentum following. This doesn't mean this is the case because we've had negative momentum inside liquidity before, but we can see that the liquidity was coming up and now it's coming down. Now, what does this mean in terms of stacking probabilities? Does this mean the VIX is likely to fill that positive fresh air gap? The DXY is likely to fill that fair value gap as well. The yields are likely to come up. Now, if that is the case, also don't take one side of the trade only. For example, if you think that Bitcoin and crypto are coming down, what's going to happen if it consolidates and what's going to happen if it goes up? You will not be prepared for that. The other thing that our community has mastered is this three-dimensional thinking of knowing that when we stack probabilities, yeah, sure, there is the capability that things can retrace, but also that they can rally and they can go flat as well. We don't exclude the other two options, no matter what we think is the dominant probability. Why is that? Because price is just always moving in a wave. It's always coming up and down and up and down. And if you've watched any of the videos that I put out over the past few years, you know I talk about it all the time. And this is why. The longer that you're inside financial markets, the more that you will look at structure and the less attention you will pay to the news, because the news is displayed real time through the charts. If we're looking at Bitcoin, do you think in the next 24 hours it's coming up to A, just consolidate around B, or coming down to C? C or below, of course A or above. A is around that 65,000, C is around the 61,500, and B is around the 63,600 mark. Please let me know in the comments. But the real case is that you really can't tell what these A levels, B levels, or C levels are without looking at structure. So let's turn the structure on so we can assess what is going on. Just above 65,000, there's a good degree of structural resistance that was tapped in the past trading session. Because we failed there and we failed at that lower 64,600 mark, we move lower to the 63,400 structural support level. And that's a little bit of a light level as well, but we do have lighter structural support levels below, but they're clustered. So we've got 1, 2, 3, 4 of them before we get down to around that 61,600 level. It's also important to know what chart you're actually looking at. When you look at Bitcoin, you're not looking at Bitcoin, you're looking at risk on sentiment indicator, the best one that exists inside the charts. People can talk about crypto, the stock market, the bond market, commodities, whatever they want to talk about. And when you've been inside financial markets for a really long time, personally, I'm coming up to 4 decades inside financial markets. When I look at these particular charts, what I'm looking for is intercorrelation. I want to really understand what the chart means. Bitcoin is a risk-on, risk-off sentiment indicator. Unfortunately, a lot of people inside the stock market don't realize that you can use Bitcoin to detect or determine weakness in the stock market indices. And therefore, in the stocks that you trade inside the stock market, also it relates to Forex as well, because we discussed the DXY's role. Everything is structurally bound. A particular chart will always move between structural resistance levels and structural support levels. When it finds it's got a lot of structural support, it will either consolidate or potentially rebound and move up. If we find Bitcoin getting into this structural support and finding a degree of support here, if we get a movement across 63,600, that puts the 64,600 in mind, and therefore a potential movement towards the A. If we start to break down through all of this structure, and these are the levels you want to keep your eye on, and they're all revealed inside that indicator. Or you can simply mark up your charts with level 1 and level 2 standard certification. If we start to move down below, we expect to open up the potential for C or below. And don't forget to stack your probabilities. When we stack probabilities, we look at different charts. I'm looking at Ethereum from a structural perspective. We can see that this structural resistance level around that 2790, it just failed. And we also failed at the 2770 mark. We got caught by structural support below, but we couldn't hold it. We went into a negative fair value gap, and generally you get momentum down to higher levels of structural support, which are playing out at around that 2669 area. So when you think about Ethereum, we could see some divergence in strength, because where the structural levels are determines the strength of the project. Often I talk about inside the masterclass weakness and strength. I'm talking about structure. Solana has been really quite strong, and when we look from a structural perspective, we can see that underneath that 158 level, or 158.50, we're just currently underside retesting it, and we have a negative fair value gap down to 153.20. There's not a lot of structures to support Solana at this current time. Looking structurally at total crypto market cap, we can see that we just bypassed areas of structural once support and have turned into structural resistance. We just had failures here. We can see a lower level of structural support around that 2.149 trillion and a level of structural resistance around the 2.177 trillion. But there's nothing substantial. There's more overhead structural resistance than there is structural support. When you're looking across structure, you should be stacking probabilities as to the potential direction of the market within the next coming period. Yesterday, I reached out to the community and I said, what structural levels would you like to see in the charts? And Gabyan Home said, oh, Dogecoin could be cool. Okay, let's look at it. 11,400 is a particular area of structural resistance to Doge, and we can see around that 10,700 mark, not too bad. But we can also see that we've rejected that. We've come down to the structural support level around 10,520, but we need to see what's structurally below this level. So let's do it. Now, how do we use this to our advantage? As traders and investors, we're always seeking out a bargain. And we can see around this 10,100 level on Doge. That's a pretty good solid structural support level. Around the 10,700 mark is a reasonable structural resistance. If we see that the VIX is spiking, we would anticipate moving down to the 10,100 level on Doge. If we see the DXY starting to collapse and the VIX starting to go down and the yield starting to go down and the indices starting to go up and Bitcoin starting to grind through all of that structural support, we would expect Doge to come up to at least this 10,700, if not 10,800 level. You can do really well if you can read across charts. Many people are invested inside the stock market, and when we look at MicroStrategy, which has been trading for nearly 10,000 days, marking up the structural levels is really quite fascinating. What you can see here, and this markup is done with level 1 and level 2 standard certification. What you can see right now is that around that 155.02 is quite a strong level of structural resistance, and around 141.08 and 139.14 is quite good structural support. A lot of people say buy low and sell high, but when the price is coming down, people just run away. Typically, what people actually end up doing is buying high and then unfortunately selling low. People do this because they just genuinely don't know where the structure is. If you know where the structure is, it's a complete game changer. And look at all this structural support down here for MicroStrategy. If we get a big jump up in the VIX and if Bitcoin starts to go down, we would anticipate getting a really strong bounce from around this 127 to 128 mark. You could look at a chart like this and not know where the structure is and how strong it is, or you could look at a chart with a markup of CTKS structure. It's a literal game changer. And thank you to Vince for recommending that we have a look at MicroStrategy. Our very own beloved Tales from the Man Cave said, can you do CTKS structure on Tesla? Of course, my friend. Now, what do you see around this particular structural support level at 220.32? We can see price was holding on. Then what happened? We had a failure. We came down to a lower level of structural support at 217.98. Then what happened? We couldn't confirm it as support. Where were we going to next? You got it, structural support, and then we bounced. We had negative air just coming back into that area, which meant that we were putting in play the lower structural support levels again. And we saw we had a failure at that 215.54 mark. We also had a failure in structural support at the 214.13 mark. And then what happened? We had a negative fair value gap all the way down to 210.22. And one thing to just be aware of, if you overlay the VIX on this, if you overlay the DXY and especially Bitcoin, for example, here's the overlay of the inverted VIX. You can see at this particular time, we had a big surge in the inverted VIX upwards. Where did that tank out? Just at that structural resistance level. Knowing where structure is helps you to understand where price can go to and from, or from and to, as the case may be. Let's continue on with this. What we can see is that Tesla has been up and down and all over the place. And when it comes to stacking probabilities, we saw that Tesla was weakening before the VIX started to spike up. You can keep this in mind when you're looking at Tesla and look how that structural resistance level just hammered in the top again and again on Tesla. And also notice how the VIX is moving. You already know the VIX and Bitcoin overlay, so hopefully you're seeing things that you haven't seen before. If we get a spike in the VIX, not the inverted VIX, the actual VIX, if the VIX goes up, we expect the inverted VIX to come down and Tesla to come down too. And where would we expect Tesla to get caught? By the buyers. Structural support around that 206.50 level. That's what we would be anticipating. It is literally X-ray vision. Each day we go through the charts and you can see how powerful that markup is, especially when you combine it with the knowledge of intercorrelation and interconnection. You can either mark up your own charts with level 1 and level 2 standard certification, or you can get the indicator from CTKSMethod.org. It literally gives you X-ray vision into the market. One way to handle market volatility is to simply know where structural resistance levels are and structural support levels are. What's this guy? He's Borsog. What's Borsog? Buy on red, sell on green. And Borsog, the price eagle, is always looking to the right. He's always understanding that structural resistance and structural support levels, where are they? How strong are they? And how does intercorrelation and interconnection between charts, what is commonly called stacking probabilities, how does that all work together? Hopefully, what you've been seeing and what you can understand is that structure determines price waves. When you get a price wave, for example, if it goes up, just like what happened with Tesla, it's going up to a structural resistance level. And if it comes down, it's coming through structural support levels until it can rebound. These price waves are always caught by CTKS structure. It is money in the bank and X-ray vision if you know how to use them. If you go across to CTKSMethod.org, you can check out some of the trades that I've done using the CTKS method. It literally is a license to print money if you know what you're doing. And there's nothing better than learning the CTKS method, and you can do so. Very kind thanks to Joe, who is offering a CTKS partial Masterclass scholarship. Your name could be here, and the Masterclass teaches you about intercorrelation and interconnection. Of course, the CTKS method, both version 1 and version 2. If you know your structural levels and you can read between charts, aka stacking probabilities, you're just ahead of the vast majority of people inside financial markets. Unfortunately, the majority of people just look at the chart that they want to trade. For example, they might look at MicroStrategy, or they might look at Apple or Tesla or DOGE or Solana, whatever it is, even Bitcoin, but they don't understand how all the charts are intercorrelated and interconnected. Probably they'd never look at the VIX and DXY if they were trading Tesla, for example, unless they've got an institutional mindset. Our community, our global family has the institutional mindset. There are lots of charts that we can go through in tomorrow's video. Please let me know what structural levels you would like to see on the charts, and you've also got these 5 down here as well. Please let me know in the comments. I'd be really happy to go through them for you. If you're interested in going from the before case, where you're basically at the mercy of your emotions and also the news, to going into confidence, which is the after, which is all about what the CTKS method delivers. Moving you from fear into confidence and being able to profit in any market condition by going long at spot. Of course, you can use leverage if you want to, but just be aware there's a lot of risks involved in that. You can reach out to me for that partial Masterclass scholarship at ctksmethod@gmail.com. Or you can use the links in the description of this video to reach out to me on X/Twitter. You'll find that when you have a knowledge of CTKS structure, when you can do your three-dimensional thinking, and when you understand how to stack probabilities by looking at the intercorrelation and interconnection between charts, it's an absolute game changer. You don't have to follow the crowd because the crowd is predominantly incorrect, and you don't have to be addicted to the news because you know that the news just shows inside the charts, and you don't need to be worried about stories either bullish or bearish. You can just simply borsog, which is buy on red, sell on green. There's a huge amount of profitability in doing so. Because you've stayed up until this point, I want to give you something really special. In yesterday's video, I was talking about these particular levels. We can see that we've rebounded from that structural overhead resistance in Bitcoin. That resistance is between 65,000 and 66,000. You can see that we've just rebounded down, but we have structural support below, and it's not too bad. And that is between 60,600 and 61,586. So if indeed we get a pullback which would coincide with a positive fair value gap being filled on the DXY and the VIX, if we get something like that, it's a unique buying opportunity. We can also see that the liquidity inside the main market, and this is US liquidity, not global liquidity. Now, why am I not using global liquidity? Most people do. Yeah, well, most people can do most things, but I'm here to make money, and global liquidity is incredibly statistically biased. If you know why that's the case, please leave a comment as to why that is the case inside the comments on YouTube. If you know this, you're cool. I have spoken about it before, but not too often. If you're borsogging, you would do incredibly well. Now, just remember, borsogging and DCA are completely different animals. When you DCA, you're getting in to hold. When you borsog, you're getting in to sell. I'd just like to say a big thank you to everybody who comments and watches inside our community. And Dickie Min, this is really funny. I'm very disappointed Bitcoin wasn't $3 million when I woke up. Oh. And congratulations to everybody who got sharp angles reverse. Kate and I really appreciate you watching and being part of our global family. And many thanks to Andrew, who said I wouldn't trade without CTKS structure. It is definitely a game changer. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.